Welcome back to the Global Business Report here on the Rise News. You should be investing in bonds. You should also be investing in Treasury bills. We talk about it all the time. This is the sovereign bond reopening auction. Took place on Monday. We previewed it. 5-year, 9-year. These are existing bonds already, just reopening them. Maturity, April the 17th of 2029 for the 5-year, May of 2033 for the 9. 200 billion offered for the 5, 100 billion offered for the 9, and you had a subscription of 59 for the 5-year, so that was undersubscribed, but 471 for the 9-year, so that was oversubscribed. I'm going to ask my guest about this. 35 bids for the 5, 215 for the 9, and only 3 were successful for the 5-year. Meanwhile, 95 were successful for the 9-year bond. Bid range between 19 to 22% for the 5, 17.5 to 25 for the 9, and they had marginal rates of 19 and 19.99, which is, I guess, basically 20. Kingsley Okereke is with us. Extremely happy to have him in the studio. Head of Securities Dealing at Zedcrest Group. Kingsley, good morning to you, sir. Thanks for joining us.
Good morning, Reuters. How are you doing?
I'm fine, thank you. Thanks for joining us. You are the man to talk to when it comes to fixed income. So we'll go to Treasury bills in a moment, but the bond auction, how would you assess demand for those bonds that were reopened? How would you describe it?
Demands were weak. If you compare that with what we saw in the February auction, you would see that February auction, we're looking at subscription level of about 1.6 trillion.
Oh, wow.
Yeah. So, but this was pretty lower, and that's because, and even with this February auction, you could see that yields were lower as well.
Yeah.
For the longest tenor, I think that was the 31s, you had 19.33 as
percent
marginal rates,
okay.
and the same 29s were offered at 19.2. You know, but this auction was materially different. Why you would say that is because, you know, we've had some bearishness in the market, and just because a lot of uncertainty, even when you look at the global space, there was a lot of uncertainty coming into the market. So you had some short sellers coming into the market that pushed yields up. So everybody speculated going into that auction, which pretty much pushed yields. And that's why you saw it close at 19.99 for the 33s, which are the longest tenor. And always, typically with auctions, it's the longest tenor that usually gets to receive most of the patronage. So
why is that? Because it's just longer and you pass for a bond duration, you can earn more money, or what?
That is it, pretty much.
Okay.
Duration,
So I studied this in school. So, and I also invested as well. Okay, wait. What about why was there only 3 successful bids out of 35 for the 5? Well, I mean, I know that you always have less successful bids than your total bids. But why is it so? Any idea? I mean, what's behind?
As I said, you know, the concentration is usually more on the longer tenor.
Yeah.
This 2029 already is a lot of supply is already in the market. So pretty much, as I said, the last auction stop rate for this was 19.2. Yeah. This is just 19%. So
gotcha.
You know, it wasn't as interesting as the longer tenor play.
What is where are we now? 27.5 for the monetary policy rates. What's the relationship there? How does that influence your outlook for rates for sovereign bonds for Nigeria? I mean, how are you seeing things there?
Yeah, for me, I just believe that for now we are just getting this retracement, you know, natural correction in the market. We've had yields drop significantly, especially after the rebased inflation figures that came out, you know, and we still saw further downward movement. I think 130 basis points in the new inflation print, you know, and that has pretty much driven yields, you know, lower. And with that, you see profit taking and some other things always happen. You know, post these global headwinds with Trump, you know, tariff imposition. You just made mention of the 25% on the automobile tariffs. So, you know, those are just causing a bit of uncertainty, which is just pushed yields a bit upwards. And we've seen a bit of pressure also on the FX, you know, with some foreign investors, you know, demanding for dollars to exit. Yeah. You know, and that's why you also saw the DMO came out, you know, and they also revised their auction calendar for Treasury bills. So we've been having almost back-to-back Treasury bill auctions, you know, at that. But largely for me, I believe that the market will still be bullish, right? I believe that, you know, fundamentally, macros are easing even on the global scene. You see that even the UK, they had their inflation print drop to 2.8%.
Yeah, that's right.
You know, so, you know, global macros are easing. The Fed has also said they still see a 50 basis point cut this year, but pretty much it's going to be on a case-by-case basis, reassessing market conditions vis-a-vis economic outlook in their view. So, all this is pretty much painting a bullish scenario for Nigeria, because if economic conditions are going to be easing, it means that financing costs should also drop. And with the base effect that we see in inflation, if that continues in that trend line, definitely at some point the MPC should look to reassessing our own conditions with a view of a likely monetary policy cut further down the line.
Fantastic. Now, as far as folks who want to invest in a 20-year bond, someone who having a child next month and says they want to pay for their university in 20 years or so, would, at the primary level, how much is it? 50 million. 50 million naira. And then, so are you able to, for those who can't get in at that point, go through a Zedcrest or other dealers to get it at the secondary level? How does that work? Yeah,
that works. The secondary level is usually minimum to trade on the secondary level is 100 million.
Oh my goodness.
Yes, because it's a wholesale market.
Okay.
But we at Zedcrest, given our muscle, given our relationships,
muscle,
we are able to. We have that capacity to be able to help you meet your needs. In smaller sizes.
So why should anyone invest in a bond? For those watching, talking about all these numbers Kingsley and Rutus are throwing around, why should I invest? Is it secure because it's the federal government that's behind it? What are the reasons to? So
yes, you just highlighted one of the key reasons, which is credit risk. We say investing in government bonds is risk-free, because the government has not defaulted in any ways, and these levels are pretty much record high levels. The highest we've seen is 22%, which is the 2035 that was only issued in January. Okay, that's the all-time high for bonds. We've not seen it cross those levels. So even at this, you are still getting a very good return for bonds, and that duration effect, if you are playing that duration, that has a significant impact on your portfolio, because even when you look at just the coupon alone and you're looking at the term to maturity, you would see that you are making your principal back in a shorter possible time. So that is why these levels are very good levels to lock in. We don't believe that these economic conditions that has plagued Nigeria from last year and getting better into this year would continue. We expect the story to continue to gradually improve. And so by this time next year, you wouldn't be seeing this level setting.
Gotcha. Real quick, I wanted to spend most of our time on bonds, but on Treasury bills, we've got the auction. You actually mentioned that. Even I was a little thrown, because I was like, wait, didn't we have one on the 19th, and then now we had another one 26th? But it looks like most of the action was on the 364. So 18.86 for the 91, 20.3, 20. So what's the story here? Similar with bonds as far as the longest tenure getting all the action?
Obviously.
Everybody's
always playing for where they can, maximize returns, right? You will see that this is actually a drop from the last auction that we had last week. The last auction stoppage was 19.94, and we are having a 19.63. And that is also because liquidity conditions have improved. Treasury bills usually move with technical factors, so liquidity conditions are improving. We're having FAC inflows coming in. We had bond maturity that hit on Monday, and all this pretty much is. We also had coupons as well, coming in. So liquidity conditions, my projection, we should be positive going into today, tomorrow. We had bonds that were debited yesterday, and that put us in a negative of 350 billion. But by the time you have the treasury bills maturing, what was maturing 1.1 trillion maturing today, and what was sold was about 808 billion. So the net of that is about 374 billion, and that should put us in a slight positive. Also, FAC inflows are coming into the system. Those that will also contribute to the positive levels. So
do you also? Treasury bills, of course, are money market securities maturing in under a year. We're just talking about longer bonds. Is that also treasury bills? Also, should they also be part of one's investment portfolio?
Yes, treasury bills will be good for liquidity management, right? So you need that ongoing liquidity, because for bonds, you really don't want to be touching bonds, especially when you know that you could reap more, given that duration play that you'll be looking at. So treasury bill will be a good liquidity hold, and also because of the return level, you look at it there, you see 24.42%. It's also good. That will also be a good optimizer in the short term for you, just to be able to balance the risks and also the alpha that you're looking at on your
Kingsley
portfolio.
Okereke, Zedcrest Group, always a pleasure. You're the bond man. Thank you so much, and the Treasury bill. Well, I should say the fixed income and the money markets man. Thank you for joining us. Always appreciate your time, sir.
No problem. Thank you.